morning, everyone. Welcome to the audit section of the CPA, curriculum. And I can see some, names that have already done far, but some names are new. So I'll give you a quick introduction about the subject. Very, very brief introduction. Of course, we'll keep talking about it as we progress. There are 6 chapters in the entire syllabus, right? But these are extremely heavy 6 chapters, extremely heavy. And, to my mind, this is the trickiest subject in the entire CPA curriculum. Of course, that's a debatable statement, I know. But that's why I said to my mind, it is the trickiest subject. I have seen even chartered accountants, flunking in this paper. But at the same time, I have also seen BCom graduates getting 98. So it is a tricky paper. But what I'm trying to say is that if you take it lightly, then it's going to backfire. Okay. So don't take this paper lightly. If you take it seriously, even BCom graduates have got 98. But if you take it lightly, even chartered accountants have flunked this paper. So that's a word of caution right at the beginning. I'm going to take you line by line through the book, right? And there is a reason for that. And you will understand why, I've done that when you start revising. You will not probably understand it now. Right now, you might feel that, we can also read from the book. What's the point of coming to class? If here also we are reading from the book. Let me tell you, when you revise and, and when you actually sit for the exam, you will realize reading absolutely line by line from the book is of paramount importance in this paper. Every line is important, every word is important. So of course I'll read, but I'll also keep explaining on the side. But at the same time, let me also say that we will only stick to whatever is required for this exam. Otherwise it gets, audit is such a paper that it gets very, very, it's all over the place kind of a situation. So we are going to stick to only what is required for this exam, and therefore whatever is there in the book and in the software, the MCQs and TBSs, we are only going to limit ourselves to that discussion, nothing beyond that, nothing more, nothing less. So just stick to that. Okay. And line by line, I'll read, I'll keep explaining. And then, of course, we are also going to do the MCQs from the software pretty much side by side in the sense, if I do, let's say, 3 modules today, then in the next week, coming weekend, right, I will do questions of those 3. So if I do 3 modules today and let's say 3 modules tomorrow, 6 modules, you will get 1 week time to go over it on your own. And then following week, coming week, I will do the MCQs of those 6 modules, right? Of course, not all MCQs, that's not possible. But, a few MCQs from each module we'll be covering in the coming weekend. And then we'll cover another new 4, 5, 6 modules in the coming weekend. And the questions of those will be done in the following weekend, and so on and so forth. Okay, so basically every week we'll cover some new modules. We'll do questions of the prior week's modules. So that way, you will be forced to revise, before coming to class, because you also would want to participate in those questions. You would want to give answers. The way you should go through this entire subject. Again, this is just my suggestion, but it has worked in the past with many students, so I hope it will work with you. I'm sharing the screen here. Just to use a blank space, I'm just sharing the screen. Yeah, maybe I'll write it here. I hope you can see the screen. So the way you should go about it is, let's say if there is A1, in A1, let's say there are multiple modules, M1, M2, M3, M4, and so on, right? Then there is A2. Again, it will have multiple modules, M1, M2, M3, M4, and so on. Then A3, right? Like this, we will cover the entire syllabus over here. Right? So you are going to go over it, right, with me in the class. Then you'll get the entire week to revise. Then we'll do some questions, okay, just to give you an idea of how the questions are. We'll do some questions of these modules in the class itself. But that I'm not counting as, obviously, this 1 week that you will get, that I'm not counting as revision. That is just part of going through the curriculum, right? That's just part of going through it, right? That I'm not counting as revision. Once the entire syllabus is done over here, right, in class. So let's say this is the timeline and the entire syllabus gets over from A1 to A6 like this. Then you are going to start your own revision. In this round of revision, this I'm calling it as first revision. Okay, this is your first going through it, right? Just going through it. Now, in the first revision, what you should do is pick up the book. Like this is, I'm saying, once it has been, the classes over here are over, right? The classes are over. Now you are doing your revision. So you will pick up the book, go through M1. Again, you'll go through it line by line, right? Understand each and every aspect. Understand, as in, of course, the understanding would have happened in the class itself. You'll revise. So you will revise each and everything. Then close the book and try to recollect, the points that this is what was there in M1. There were 5 pages, let's say. In the 5 pages, there were 3 main topics. In the 3 main topics, these were the sub points, right? Closing the book, right? In your mind, you'll have to do that revision. Now, if you're able to recollect everything, right, that means you're ready to do the questions. So if you're not able to recollect, then go through it one more time. Okay, try to figure out which point you missed out, why you are not able to recollect. So do that. And then once you have reached that stage that yes, you can recollect all the points, then you do your first round of MCQ over here. And maybe the TBS also, if there is a TBS. Every module does not have TBS, right? If there's a TBS, do the TBS as well. But TBS, I would say, just for right now, I'm not writing it over here. TBS you should do once you're done with the entire, let's say, entire A1. So first is you do the revision, do the MCQ, do the revision, do the MCQ. And once you're done with the entire A1, then maybe you can do the TBSs of A1. Okay. Now in this round, and like this, you finish off the entire syllabus. You finish off the entire syllabus, then go to 8. By the way, here, once you do the MCQ, okay, let me just complete this part first, then I'll go to the next one. So once you do the MCQs, right here, you would, I mean, that's the normal trend that students normally get anywhere between 50 to 65%, right? When you do it here. 50 to 65%. That means if there are, just as an example, if there are 100 questions, you would get about 50 to 65 correct, and you would get, the remaining wrong. That's normal. If you're getting more than 65, that's great. That means you are in pretty good shape. If you're getting less than 50, then that's a matter of concern. That means you have not done the revision properly, and you are doing the MCQ before your before time as in before doing a proper revision, you're doing the MCQs, right? So that's an indicator. If you get less than 50 in first 2 or 3 modules, understand that you are not yet ready to hit the MCQs. Okay. So go back, do your revision thoroughly again before proceeding with the MCQs. Now this will, so 50 to 65 is normal. Normally students get this much in the first round, which is fine, no problem. If you're in this range, you're perfectly okay. If you're more than 65, you are even better. Less than 50 is a matter of concern. Now, like this, by the way, if you get whatever you are getting, 50, 60, 65, 70, whatever you're getting, the idea is don't proceed to M2. Don't proceed to M2. Okay, go back to M1. Go back to once you have got, let's say, 60%, right? Go back to M1 and read it one more time. This step is extremely critical if you really want to score high, good marks in the first attempt. Once you have done the MCQ, remember you have done A1, M1 once in the class, then during the week, right? You have done it once, then you have done your own revision, then you have attempted the MCQs and you have got 60. Go back to M1 and read it one more time. Okay, obviously this time it will be quick, but it is important to read it one more time to understand where you got the 40% wrong. Which areas or which points, was it a memorization issue? Did you not remember the point? Was it a conceptual issue? Did you not understand the point? Was it an interpretation issue? Did you not interpret the question correctly? What was the issue? You would try to find out the issue by going through M1 again. And obviously, right, this time you will focus more on the areas where you got the questions wrong. Okay, this step is extremely critical. If you don't do this and you straight go to M2 after doing M1 MCQs, which most students, by the way, they do, you are not doing justice. Okay, do M1 and then, of course, don't go through the MCQs again. Just do M1 once more and obviously focus on areas where you got the questions wrong, right? So this way, it will get absolutely solid. Your preparation will become very solid. And now move to M2, repeat the whole process, go through the book, close the book, try to recollect the points. If you're able to recollect the points, go through the MCQs. If you're scoring anywhere between 50 to 65, it's fine. But then go back to M2 and read it one more time. Then proceed to M3 and follow this process. Okay. Now, following this process, you would cover the entire syllabus like this, right? A3, you would you will cover the entire syllabus like this. You would have done the MCQs, you would have done the TBSs, right? Once. And you would have scored 50 to 65%. If you're scoring better, great for you. Then once you're done with this, if you're only doing audit at this time and not another subject, if you're doing another subject, then I would say go to that subject and finish this round of revision, okay, once, and then come back to audit. Otherwise, if you're not doing another subject, you're only doing this, then come back to audit for your second revision, right? Quickly go through the modules, quickly, as in, obviously you have done it now so many times already. Of course, I'm calling it first revision, but before that also you have read it twice, once in class, once yourself. And then in the revision, you have read it twice, once before doing the MCQ, once after doing the MCQ. So you have read the module 4 times. So now it will be like, half an hour thing to go through the module, right? But it is important to go through it. So go through it, just maybe half an hour each. Do the MCQs, do the TBS. This time you would be getting anywhere between 75 to 85, right? If you're getting more, great. Complete the entire syllabus like this. This is your second round, and then comes your final round of revision, third revision, where you don't have to go through the entire module. You just go through maybe the pass keys, right? There are pass keys in the book. There are some mnemonics. Go through the mnemonics, go through some points that you may have written on the side, right? The important points, maybe just go through the highlighted portions, highlighted / underlined portions, right? That's it. And MCQ also, you don't have to do all the MCQs, just do the flagged ones, the flagged MCQs, right? You can flag the MCQs. Flagging means you just basically mark it for revisiting them later, right? So just do the flagged ones. And in this revision, when you try even the flag questions, which are obviously the trickier ones, the more difficult ones. That's why you had flagged them, right? So even in those, you should be scoring 85 to 95, or let's say 90 plus. Let me write 90 plus, okay, greater than 90. And if you do this for the entire syllabus, you score 90 plus in every module, every chapter. That means you are ready for the exam. Okay, so now schedule your exam. Okay, maybe you can schedule your exam after this only. At this stage, maybe you can schedule your exam, right? Uh, Otherwise, if you're not sure, then schedule your exam here once you have reached 90 plus in all the topics. And then, of course, before the exam, you will obviously do your final round of revision, right? Again, here also, you will just go through this, maybe repeat the third revision, just go through the passkeys, mnemonics, just do flat questions, all of that. And of course, here you will also do the mock tests. So there are some mini tests, right? So you will do the mini test. Mini tests are after every 2 chapters, I guess. So after A1 and A2, there is a mini test. So do those mini tests. Then after A3, A4, there is a mini test. After A4, A5, A6, there is a mini test. So there are 3 mini tests. And then there are 2 mock tests. Right? This is just for your like a quick practice and all that. By the way, in the first round, when you do the MCQs, again, this is my personal suggestion. In the first round, don't look at the clock, how much time you're taking to solve the question, right? The idea is to read the question properly, understand it properly, and try to give the right answer in the first attempt, right? Uh, Even if it is taking a longer time, fine. The idea is to first get it right, okay? So in the first attempt, if you get it right, second time onwards, try to also clock yourself that this time I have to get it right in the allotted time. And allotted time is I'll talk about it later, but just to give you an idea right now, maybe 1.5 minutes per question. Okay, not more than that on an average. In fact, it should be even less, but right now I'm saying 1.5 minutes per question, not more than that. Okay, so if you're solving 20 questions, you should not take more than 30 minutes, like that. So that should be the idea, that first time you should get it right. Okay, that's your aim, get it right. Second time, idea is to get it right, but also in the time, get it right in time. Right? Third time also get it right in time, obviously. So timing is very important, right? So now do your 3 mini tests, 2 mock tests at this round, the 4th revision round, which is your final revision round, and then you sit for the exam. Right? So this is how you should proceed in this paper, right? So 4 rounds of revisions, apart from going through it in the class and the weekly revision. Apart from that, 4 rounds of revisions. And yes, if you have still not reached 90, then maybe you need more revisions. Okay, that means you're not doing your revisions thoroughly. Some people may reach 90 plus in the second round itself. Fine, great for them. If you have reached 90 plus in the second round, then you can skip the third round. The idea is to get 90 plus at home. Okay, some people may take 2 rounds, some people may take 3 rounds, some people may take 4 rounds, some people may take more. Idea is to get 90 plus at home. If you're getting 90 plus at home, you're ready for the exam, because you have a buffer, sort of. You're so well prepared that even on a bad day, you will still pass. Okay, so that's the idea. I hope it's clear to everyone. And just one more thing before I actually start, and I say this to every batch at the beginning of every subject, whatever subjects I teach, I say this to everyone, that please do not compare. If you're a chartered accountant or doing CA, especially I'm saying this to them, please do not get into a comparison mode between what happens in India and what happens in the US. Okay, please, no comparisons between the auditing standards, because that is going to be extremely harmful to you in the exam. Okay. because if you are in the comparison mode, then uh, you're all the time thinking about, okay, we do this here, but in the US they do this. We do this here, this is the treatment. In the US they do this, right? If you start doing that in the exam, what happens is, due to the pressure of time, right, the clock is ticking, there is so much still left to be done. Obviously you get you're under pressure. Now, what happens is, under pressure, when you do the questions, you see the four options, right? In the multiple choice questions, you see the four options, and you click one answer because you think, yeah, I have read this line somewhere, right? I've read this line somewhere. This must be the answer. So you tick on it, and then once you come out of the center, and when you start thinking about it, with a peace of mind, what did I do in that question? You realize that I selected the wrong answer. That was the right answer as per the Indian, the standards of auditing, but it was not the right answer as per the US auditing standards, right? So that happens a lot of times. A lot of students have come out and said that, this is what I did. In the pressure of time, I clicked on that answer because my mind said, I've read it somewhere. It was, somewhere, obviously, in the subconscious mind. So, you gave that answer, but later you realize that was not the right answer as per US. So that's why comparison, you have, after you become a CPA, you'll have your entire life to do comparisons. Nobody is going to stop you from doing comparisons, right? In fact, I would encourage you to do comparisons after you become, right? But right now, while you're taking the CPA exam, just focus on this. Forget about that. Okay, so that unlearning is very, very important. You have to unlearn to learn, right? This is a very important thing you need to do. Unlearn your old stuff to learn new stuff. Okay. Uh, all right. So as I said, there are 6 chapters. Audit 1 has, as you can see here, there are 10 modules, right? So these are big chapters, right? In fact, not even 10, 11 modules, I'm sorry, 11 modules, right? So these are very big chapters and very heavy stuff. Every module is heavy, right? So this is not like 6 chapters of any other subject. These 6 chapters, I normally say this, that the other 3 papers of CPA on one side, audit on one side, it is that heavy. Okay. So let's get started. You have professional standards, right? Then audit engagements, small modules. You can see the number of pages here, small modules. Forming an audit opinion, small module. Then what is an unmodified or unqualified opinion? Then modified opinions uh, due to financial statement issues, due to audit issues. Then emphasis of matter, other matter, and explanatory paragraphs. Reporting with different opinions and other auditors. Different opinions, right? We'll talk about it, obviously, when we go through this module, reporting with different opinions and reporting with other auditors. Okay. Subsequent events. So here, different opinions means, can you give a different opinion for last year's and a different opinion for this year? Other auditors means, obviously, there are more than one auditor for this, doing the audit. Subsequent events, other information and supplementary information. Then 11th module is special purpose frameworks. Special purpose frameworks, people who have done FAR would know. These are the OGBOA, the other comprehensive basis of accounting, right? The special purpose frameworks. So we'll talk about the audit of special purpose frameworks also. Now, yeah, one more thing. I believe all of you have done FAR. If you have not done FAR, then you might face little bit of challenge here, little bit of challenge. Of course, it is not impossible to do audit without doing FAR. It is not impossible, but it makes it slightly more difficult. Because obviously, what are you auditing? You're auditing financial statements, right? So if you don't have the knowledge of financial statements of FAR, of US GAAP, how are you going to audit that, right? So you must have knowledge of what you are auditing, right? So it is important to go through FAR before going through audit. So what you can do if you have not done FAR, maybe you can watch the FAR recordings side by side, and finish that off also. Maybe not study that as such, but just go through the recordings, okay? And you don't have to do it like complete it and then come to audit. You can do it side by side, but I would say that it is recommended, right? That go through the FAR recordings also side by side so that you get an idea of what is there in FAR. So that way, if eventually you have to do it, so it will also help you in your FAR preparation later. And secondly, of course, you will get a knowledge of US GAAP and about the financial statements. So you will understand audits better. Memorization in audit. Yes, there would be memorization involved. Deepak, I'm answering your question. Understanding, of course, would be required, but there would be a lot of memorization that would be required in audit. Okay. All right, so let's get started. So this is your first module, professional standards. The auditing and attestation section tests audits of issuers, non-issuers, governmental entities, not-for-profit entities, and employee benefit plans. So who are issuers? Of course, the actual technical definition we will see later. But right now, for your reference, you can simply write issuers are basically public companies. Non-issuers are non-public. That means basically private, right? So public and private. Like this, you can write, or listed, unlisted. Governmental entities, of course, you know what is governmental entities, right? And not-for-profit also, employee benefit plans also, I believe right? Anyways, if you don't know, we'll come to this. A1 is pretty much introducing you to the subject. There would be a lot of terms that you will see here, which actually will be covered in the later chapters in detail. Okay. In addition to audits, this section also tests other types of engagements that an accountant may be called upon to perform, such as accounting and review service engagements and attestation and assurance engagements. Right? So basically, we are talking about audits, accounting and review service engagements, attestation and assurance engagements. So mainly three types of engagements we are talking about that a CPA or a CPA firm does typically. So we are going to cover all these three types of engagements, not just audit, although the name of the paper. So the name of the section, this paper is auditing and attestation section. Right? Okay, so each engagement requires the accountant to follow the applicable ethical guidelines and standards for the engagement. So, there are different types of standards for different types of engagements. For audit, there are different standards. For accounting and review services, there are different standards. For attestation engagements, there are different standards, right? So, for example, of course, we will go through it just now in this table below, but this is SAS, right? Statements on auditing standards. But of course, it depends on whether you are doing audit of an issuer or a non-issuer. So for a non-issuer, it is SAS. For an issuer, it is PCAOB-AS, Public Company Accounting Oversight Board Auditing Standards, PCAOB-AS. For non-issuers, it is Statement on Auditing Standards, SAS. Right. So for audits, it is that. For accounting and review services, there is SARS. statements on standards for accounting and review services. And for attestation, it is SSAEs, SSAE. Statements on standards for attestation engagements, right? So there are different standards. We will go through it just now in the table below. So there are different standards that you have to follow for different types of engagements, right? That is what this particular para is saying. So each engagement requires the accountant to follow applicable ethical guidelines and standards for the engagement. For example, audit engagement requires auditor to perform audit in accordance with GAS. So basically SAS and PCAOB put together, basically the overall term is GAS, right? These engagements and applicable standards will be covered in more detail in later modules. So this is the table here. This table you need to know inside out. Audits, as I said, for non-issuers, it is SAS, statements on auditing standards. The section reference is AUC. This you don't need to remember. They don't generally ask the section reference, right? AUC. Standard setting body. Who has basically come out with the statements on auditing standards? Who issues the statements on auditing standards? It is the AICPA Auditing Standards Board, ASB. AICPA ASB Auditing Standards Board. Okay, and who does it apply to? SAS provides generally accepted auditing standards for the audit of non-issuers. Okay, so it is applicable to non-issuers. In addition, SAS provides guidance for other services such as review of interim financial information and letters to underwriters. So review of interim financial information. Also, if you have to do a review of interim financial information, you will have to follow the statements on auditing standards. And if you're issuing a letter to the underwriters, all this will be covered in detail later in separate modules. If you're issuing a letter to underwriter, then also you will have to follow SAS. But of course, we are talking about non-issuers here. So if you see here, the applicability, it applies to audits of annual historical financial statements of non-issuers. Okay, annual historical financials. So we are not talking about futuristic financials. We are not talking about projections here. We are not talking about forecasts here. For that, separate standard will be followed. We are only talking about historical financials, the year that has already gone by, right? You are doing the audit of financial statements of the year that has gone by, not the year that is coming up. Okay, so audit, generally the word audit is always used in the context of historical financials. We don't use the word audit in the context of projections or forecasts. Okay, we don't use that. We use the word audit in the context of annual, first of all, in the context of annual, right? For interim or quarterly financials, we don't use the word audit. We use the word review. Okay, so the word audit is used generally in the context of annual financials and also in the context of historical financials. Okay, so if you're doing the audit of annual historical financials of a non-issuer, you're going to follow SAS for doing that engagement. Also, some special reports for non-issuers, like we saw here, letter to underwriter, etc. Those are special reports. But again, we are talking about non-issuers here. And interim financial statements where the annual have been audited, and now you are doing the interim, then you will follow SAS, again of non-issuers. So SAS is only for non-issuers. So if the annual audit has been done, the annual financials have been audited, and now you are doing the interim, then you follow SAS. If the annual has not been audited and you are doing the interim, then you will not follow SAS. For that, you will follow a different standard, which we will cover in the next page. Okay, is that clear to everyone? So 3 things here: annual historical financials, special reports like letter to underwriters, and interim financials where the annual is audited, where annual is audited, then you will follow SAS. And of course, we are only talking about non-issuers over here. Is that clear? So whatever I have highlighted, you need to obviously remember that. Okay. Now coming to the next one, PCAOB-AS, Public Company Accounting Oversight Board Auditing Standards, PCAOB-AS. This is issued by PCAOB Auditing. The section reference is PCAOB-AS. It is issued by Public Company Accounting Oversight Board, the PCAOB. And this is applicable to issuers. PCAOB-AS provide generally accepted auditing standards for the audits of issuers. In addition, PCAOB-AS provide guidance for other services such as review of interim financial and letter to underwriters. Right, so you can see here, it is similar, but it's for issuers. Now here also you have audit of annual historical financial statements for issuers. You have special reports for issuers. And here you have only interim financial statements written over here, nothing written in brackets. Why? Because issuers have to get their annual audited. There is no option. It's not a question of where or if, right? Issuers have to get their annual audited. So there is no choice for them. So therefore, annual will be audited. So if annual is audited, then interim will be done under PCAOB-AS. There is no question of an issuer not getting their annual financials audited, right? So there is no choice for not getting it audited. They have to get it audited. So therefore, there is nothing written in brackets. Okay. Here in the case of non-issuers, they may have got the annual audited, they may not have got the annual audited. If they have got the annual audited and you are doing the interim, then you will follow SAS. Okay, is that clear? Next. GAGAS, Generally Accepted Government Auditing Standards, GAGAS. Government Auditing Standards, so it is issued by the Governmental Accountability Office, the GAO. And of course, it is basically applicable to government organizations, government programs, government activities, government entities. But it is also applicable, this last point, of entities that receive government funds. That receive government funds. Okay, so it may be a non-government organization, but it has received funds from the government. So on them also, GAGAS will become applicable. Okay. So GAGAS provides guidance for audits of, again, here we are talking about audits only of all this, financial audits or performance audits of government organizations, programs, activities, and of entities that receive government funds. Okay, is that clear? So SAS and PCAOB auditing standards cover some other type of engagements also apart from audits, right? Special reports, interim, right? But GAGAS covers audits, right? Audits, but financial or performance audits. As far as, you're concerned right now, just stick to this. Whatever is written in the book. The book is the Bible. For audit, the book is your Bible. Now coming to two other types of standards. This is for other engagements, right? The previous page was for audits. This is for other engagements. Here you have SSAE statements on standards for attestation engagements. The section reference is 80C, and this is issued by AICPA. SSAE provide guidance for attestation engagements, as the name suggests. What does it apply to? It applies to examination, review, agreed upon procedures, report. Okay, now I'm taking a pause over here. If you noticed here in the previous page, this is audits of annual financials. This is interim financial statements. This is special report. This one says reports, special reports. Right? This one did not use the word report as such, right? It said audits of annual historical This one said interim financial statements, right? It did not use the word report, although of course at the end of the audit you will issue an audit report, right? But what I'm trying to highlight here is that here it is using the word report. Now, of course, we'll talk about it later when we go to the examination review, all this, there's a separate module for this. What I'm trying to highlight here is that examination, it's an examination report. They are not saying it is an examination engagement. You know what I mean? It is not an examination engagement. It is an examination report that you're going to issue. Similarly, you're going to issue a review report. Similarly, you're going to issue an agreed upon procedures report. So if you're issuing an examination report, if you're issuing a review report, if you're issuing an agreed upon procedures report, you have to follow SSAE. Why they are not calling it engagement? Why are they not calling it a review engagement, examination engagement, or agreed upon procedures engagement? We'll talk about it when we go to that module. There's a it's not that, it is not an engagement. Of course, it is an engagement, but why are they not using the word engagement and they are using the word report? We'll talk about it when we go to that module. Okay. Not a big deal. It's not a very big deal. Okay. So even if you call it an examination engagement, you won't be wrong. But I just want to highlight here that the word report has been used, not the word engagement. Okay. You won't be wrong if you call it an engagement, but there's a slight difference between engagement and report here, which we will talk about later. So in an audit engagement, you issue audit report, right? Similarly, in an agreed upon procedures engagement, you will issue agreed upon procedures report. Okay. But we will see in certain types of engagements, I'm not right now using the name, certain X, Y, Z type of engagements, you will issue examination report. Okay, so here the name of the engagement would be different than the name of the report. That is where the difference lies. Okay, audit engagement, audit report, AUP engagement is AUP report. But in certain other types of engagements, you will issue examination report. What are those engagements where you issue examination report? What are those engagements, XYZ engagements, for which you issue review report? That we will talk about when we go to that module. Okay, so therefore there is a very slight, technically it will be wrong if you call it examination engagement, examination report, but we'll talk about it later. Now, examination review or agreed upon procedures report on what? Audit was on historical financials. This is an examination on what, or review on what? On a subject matter, or an assertion about a subject matter. On a subject matter or an assertion about a subject matter, that is the responsibility of another party. That is the responsibility of another party. Okay, we'll discuss in detail when we go to this module. What does this mean? Right now, maybe you can understand it like this. I know I'm going to give a very like a silly example, but let's say you are issuing a report on an assertion on a subject matter, right? Subject matter. So suppose you're saying Ram is a good boy. Okay, I know it's a very silly example I'm giving, but I hope it'll help you in understanding. You're saying Ram is a good boy, right? That means you are directly talking about the subject matter Ram. Okay. But when you're talking about an assertion about the subject matter, okay, that the assertion that Ram is a good boy is whatever, is correct, is true, right? Whichever way you want to give your report. Of course, what is the exact language we'll see in the module, but the assertion that Ram is a good boy is, let's say, correct. Now here you are reporting on the assertion that Ram, there's hardly any difference, but here you are directly talking about the subject matter, and here you are talking about the assertion about the subject matter. Okay, right now this much is enough. We will do it in detail later. So you're giving a report on the subject matter, or you are giving a report on the assertion about the subject matter, right? Both are allowed, both are fine. And there are 3 types of reports we are talking about here under SSAE: examination report, review report, agreed upon procedures report. 3 types of reports. I'm not saying 3 types of engagements. I'm saying 3 types of reports. On what? On either the subject matter, directly on the subject matter, or assertion about the subject matter. And that is the responsibility of another party, right? Now, responsibility of another party, Ram is responsibility, let's say, of his parents, right? So, like I said, it's a silly example, but Ram is the responsibility of his parents. So if Ram is a good boy or not, let's say the parents have engaged you to now report on Ram. Okay, parents have engaged you. You are the teacher, for example. So parents have asked you to give a report on Ram. So now you're giving a report, Ram is a good boy, or you're giving that the assertion that Ram is a good boy is correct. So you're reporting on the subject matter or assertion about the subject matter. That is the responsibility of not you, not the practitioner. You are the CPA practitioner, not your responsibility, right? You're only reporting on it. It is a responsibility of another party. That another party could be your client, could have engaged you, or somebody else may have engaged you. Okay, somebody else could be, suppose Ram is getting married. Okay, Ram is going to get married. Now the girl's father has approached you that I am thinking of marrying my daughter to Ram. Please tell me, give me a report. So the girl's father, for example, has engaged you. You are the CPA practitioner. So you are now giving a report on the subject matter. That is the responsibility of a third party, the parents. Okay, silly example, I know, but now I hope you have understood this line slightly better, right? That you are giving a report on a subject matter or the assertion on a subject matter. You may have been engaged by the party responsible for it. You may have been engaged by a party not responsible, but somebody else is responsible. Okay, something like that. Then the final one is SARS, Statements on Standards for Accounting and Review Services, SARS. ARC. AICPA Accounting and Review Services Committee is the standard setting body. AICPA Accounting and Review Services Committee. So there is a committee set up by AICPA that does this. But for SSAE, AICPA itself issues. There is no committee for it. Okay, AICPA issues SSAEs, but AICPA Accounting and Review Services Committee issues SARS. And what is this for? SARS provide guidance for unaudited financials or unaudited financial information, unaudited financial statements or unaudited financial information of non-issuers, right? So SARS is for non-issuers. Here you can see different types of engagements, preparation, compilation, review of historical financial statements for non-issuers, and preparation or compilation of pro forma financial information and forecasts for non-issuers. Okay, so if you are doing the review, okay, doing review of historical financial statements, which standard would you follow for non-issuer, for a non-issuer? If you're doing the review of historical financial statements for a non-issuer, which standard will you follow? The answer is if annual is audited, then SAS. If annual is not audited, then SARS. Is that clear? You are doing the review of historical financials. Okay. This does not say review of annual historical financials. Annual is not review, annual is audit. Okay. You are doing review of maybe quarterly historical financials. Now, if the annual is audited, then you will follow SAS for doing this review. If the annual is not audited, you will follow SARS for doing this review. Right now, we are talking about the review. For the review, which standard will you follow? For the review, you will follow SAS if the annual is audited. For the review, you will follow SARS if the annual is not audited. Okay, go to the previous page and see what was written over here. Review of interim financial. But which one? Interim financials where the annual have been audited. For that, you will follow SAS. Okay. That means if it is not audited, you will follow SARS. Okay. So here, three types of engagements are covered: preparation engagements, compilation engagements, review engagements of historical financials. And you also have preparation engagement or compilation engagement on pro forma financials and forecasts. What is a pro forma financial statement? We will talk about it. What is a forecast? We'll talk about it. What is a projection? We will talk about it. All those things, okay? This is for non-issuers. And if it is unaudited, right? That means the annual is unaudited. All right, next. So all in all, what did you cover? We covered SAS. We covered PCAOB-AS. We covered GAGAS. We covered SARS. SSAE. Then we covered SARS. Is that clear? SAS, non-issuer, PCAOB issuer, GAGAS is government, but also non-government entities that receive government financial assistance. Even they are covered under GAGAS. SSAE and SARS. Now, SSAE, SARS is of course non-issuer. SSAE does not specify anything. As you can see here, it does not specify anything, right? So it could be for anybody, but again, there is a separate module on SSAE. In fact, two modules, I guess, on SSAE, where we will cover SSAE in detail. Right now, you can leave it blank. Okay, that means it could be for anybody, but right now, just leave it blank. And SAS is for annual audit of Audit, the word annual, these are important. PCAOB, again, the word audit and the word annual. GAGAS is also audit and the word annual, right? But these are financial statements. This could also be a performance audit. The GAGAS one could also be a performance audit. SSAE are three types of things, three types of reports: examination report, agreed upon procedure report, review report, agreed upon procedure report, agreed upon procedure report. And SARS is basically preparation, compilation, review. SAS and PCAOB also cover review. Now you can see here, review is covered here, here, here. So review is the most confusing one. This is review where annual is audited. This is review of what? Review of historical financials. Historical FS where annual is audited. This is review of historical financial where annual is not audited. Annual is not audited. This is a review not on historical financial. This is a review on a subject matter or an assertion about a subject matter. Is it clear? What are the different types of reviews? Of course, this review is also similar. This is also of historical and annual historical This is also a review of historical financials where the annual is audited. And here, obviously, the annual has to be audited because it's an issuer. Issuers don't have any choice. They have to get their annual audit. So now I hope it's clear. Review is the only one which makes, which confuses everyone. Okay. Review of a subject matter or assertion about a subject matter, SSAE. Review on historical financials where annual are not audited, SARS. Review of historical financials where annual is audited, SAS. And examination, review and agreed upon procedures are reports, not engagements. All right, let's proceed. Now we have some guidelines. Those were standards. These are guidelines. Code of Professional Conduct. Section reference ET issued by AICPA. AICPA Code of Professional Conduct provides members with guidelines for behavior in the conduct of their professional affairs. Of course, it is behavior in the conduct of their professional affairs. We are not talking about conduct in their personal affairs, right? Whether somebody does, rash driving, whether somebody takes alcohol, those are personal, outside office. We are not talking about, we are talking about professional affairs. In addition, it provides assurance to the public that the profession intends to maintain high standards and to enforce compliance with these standards by its members. Okay, by the way, when I said that whether somebody takes alcohol, I did not mean or suggest that taking alcohol is a bad thing and therefore anybody who takes alcohol is a bad person. No, that was not the idea. Absolutely not, right? But what I'm trying to say is that, what they do in their personal life is not going to be of concern to the, to the Code of Professional Conduct. What is of concern to the Code of Professional Conduct is how they are conducting themselves in their profession, right? In the in the delivery of their services, right, etc. So in addition, it provides assurance to the public that the profession intends to maintain high standards and to enforce compliance with these standards by its members, right? So the idea is that the members should conduct themselves, in a proper way, maintaining high standards. Members, and it is applicable to all the members of AICPA, not just members who are in practice, but also members who are in employment, also members who are in business. It's applicable to everyone. Everyone as in all the members of AICPA. And of course, we'll talk about it in detail in A6. Statements on quality control standards, SQCS, quality control. It is also issued by AICPA. Quality control standards, SQCS provides guidance to the CPA firms about a quality control system. Quality control system consists of policies and procedures. Do they have policies and procedures in place? Designed, implemented, and maintained to ensure that the firm complies with professional standards, right? So do they have policies in place to ensure that all the members are following the professional standards and the firm is complying with the professional standards as well? That means for an audit engagement, they are following SAS. For an examination report, they are following SSAE. Right? Are they complying with the professional standards? Right? It should not happen that for an examination report, they are following SARS and they're issuing an examination report following the SARS standards. Then it will be completely wrong. Right? Or for a preparation engagement, they are following SSAE. Preparation or compilation, they are following SSAE. Then it will be completely wrong. Right? So they are following the appropriate standard for the appropriate engagement. Do they have a policy in place to ensure that? Do they have a policy in place to ensure that all the members are following the guidelines, right? And appropriate legal and regulatory requirements, and that any reports issued are appropriate in the circumstances. Any reports issued are appropriate, right? That means, again, for a review, they're issuing a proper review report, right, in the form and format of review report, right? Because for every report, there's a particular form and format. They should not be following a different form and format for a different kind of engagement, which is not applicable, right? So that's a quality control system. It is applicable to the entire firm, not just to a particular engagement, but to the entire firm, whether the firm is maintaining a quality control system. That means, do they have policies and procedures in place, designed, implemented, and maintained to ensure that firm complies with professional standards? Okay. CPA firms providing auditing, attestation, and accounting and review services. It's applicable to all CPA firms providing any of this, providing auditing auditing, providing attestation, providing accounting and review services. Auditing guidance, the GAS hierarchy. There are 3 levels of auditing guidance, 3 levels. From the most authoritative to the least authoritative, there are 3 levels. This is the least authoritative. Now, SAS is for non-issuers. We have already seen that. And for issuers, it is PCAOB auditing standards. This is audit guidance, specifically 3 levels of audit guidance. We are talking about audit guidance here. The auditor, that's why, because we are talking about audit, we are using the word auditor, not the word CPA or CPA practitioner. We are using the word auditor. Of course, the auditor is a CPA, but what I'm trying to say is that for other engagements, you will see the word CPA, the CPA should, or the practitioner should. Here, they're saying the auditor should because we are specifically talking about audits. The auditor should use professional judgment in applying SAS or PCAOB AS to a particular engagement. Okay, so whether you should follow SAS in a particular audit engagement or PCAOB AS, that's a matter of professional judgment which the auditor should apply. Second, be prepared to justify any departure from presumptively mandatory requirements. What is a presumptively mandatory requirement? We'll see that in just a moment. But if you are departing from it, okay, it is a presumptively mandatory requirement, right? If you are departing from it, you must be prepared to justify the departure. Why you departed from that particular requirement? Why you did not follow that particular, guideline? So be prepared to justify any departure. Professional judgment in applying SAS or PCAOB is justify any departure. So these are the two things. Now, specific language must, when any particular clause in the auditing standards uses the word must, that means it is unconditional requirement. Or even the word required, must or is required. So if it says the auditor must, or the auditor is required to do this, okay, that means you have to do it. It is an unconditional requirement. You cannot depart from it, which must be followed in all cases in which the requirement is relevant. Okay, so it is an unconditional requirement. Should, the word should, the auditor should do this, the auditor should do that. Wherever it is written as should in the auditing standards, it indicates a presumptively mandatory requirement. Now, what does that mean? Presumptively mandatory means it must be followed in all cases, except in rare circumstances when the departure is permitted if there is an appropriate justification. So in rare circumstances, if there is an appropriate justification, performance of sufficient alternative procedures and thorough documentation, then you can depart from it. Wherever it is written as must or is required, you cannot depart from it. It is an unconditional requirement. You have to follow it. But where there is should written, there also you must follow it in all cases, right? But here there is an exception. In must or required, there was no exception. In should, there is an exception that in rare circumstances, see, there are three things that you have to fulfill. There is an appropriate justification, right? You are performing alternative procedures. And you are thoroughly documenting it. You are documenting the fact that we are not following a particular clause in the auditing standard, but we have performed alternative procedures. What is the justification of not following it? What is the alternative procedure you have followed? And how the objective has been met. So you have to thoroughly document it also. Okay. So this is unconditional. Here there is an exception, but the exception is in rare circumstances only you can depart from it. And even in rare circumstances, when you're departing from it, you have to give these three things. There has to be an appropriate justification. You must follow alternative procedures, and you have to thoroughly document it. And may, might, could are just explanatory material that does not impose a professional requirement. Okay. So SAS or PCAOB AS are the most authoritative, right? Most authoritative is SAS and PCAOB. And in SAS or PCAOB, wherever the word must or required is written, it is unconditional. Wherever it is should word is written, then also it is, you have to follow it in all cases, but there is an exception where you can depart from it. Wherever may, might, could are written, those are just for your guidance. Those are just explanatory. They do not hold they do not hold much authority. Then comes the next, interpretive publications. It is called interpretive, or it could also be called interpretative, right? Both the words are used. Both the words are okay. Interpretive publications are recommendations. So these are recommendations regarding how SAS should be applied in specific situations, right? They are not considered to be auditing standards. So if something is written in interpretive publications, they are not auditing standards. They don't have the same authority as auditing standard. They are only recommendations. In this case, The auditor should consider the guidance provided by these applications, right? So you should consider, you should not ignore them. You should at least go through it and consider. And if you're not following something which is written in the interpretive publications, you should be able to explain any departure. You should be able to explain any departure. And how, if you have not followed this particular recommendation, then how have you, what have you done to comply? How compliance with the standards was otherwise achieved? So that means, of course, you have to document this also. If you have not followed something which is written in the interpretive publication, you must document it, that how you have complied with the standard otherwise. Examples of interpretive publications are auditing interpretations of gas, exhibits to gas, auditing guidance provided in AICPA auditing and accounting guides, AICPA auditing statements of position. Right? So these are just some examples. You don't have to memorize this because these are just examples. The list could be much bigger than this. Only thing is that, yes, if you see a name in the exam, right, 4 options. One option is, and the question is which one of this is the most authoritative, for example. And one of the option is SAS. And the other options are, let's say, statement of position, exhibit, and maybe auditing interpretation. Which one is most authoritative? Obviously, answer is A. SAS is the most authoritative out of these 4. Right, so some simple questions like this. Okay, so I'm just still highlighting interpretations, auditing, obviously auditing interpretations, exhibits to gas, auditing guidance, and statements of position. Okay, other auditing publications, these are least authoritative. See, in the middle one, the second one, interpretive, it is not as authoritative as SAS, but still you have to be able to explain any departure. In other auditing publication, you don't even have to explain. See, no, here also you have to explain, sorry. Here also you have to explain. But what is the difference then between 2 and 3? Other auditing publications have no authoritative status. May be helpful to the auditor. Auditor should consider. Here also auditor should consider, not totally ignore. And here also be able to explain any departure and how compliance was otherwise achieved. Right? So in the treatment, there is no difference. Whether it is interpretive publication or whether it is other auditing publication, you still have to consider them. You still have to be able to explain any departure. So in terms of your treatment, there is no difference. Yes, in terms of the authority that that literature holds, there is a difference. Here examples are articles in the Journal of Accountancy or articles in the AICPA, CPA letter, textbooks, other auditing publications, education materials, right? So these are just, have no authority, but still, you should be able to explain any departure, right? So this is a slightly counterintuitive statement here, but still you have to explain any departure. Okay. So this is your gas, audit, audit hierarchy, auditing guidance, the gas hierarchy, basically, the gas hierarchy, right? So this overall is called gas. Overall, this is called gas. In gas, there are 3 levels. Number 1 is the SAS or the PCAOB auditing standards. Number 2 is the interpretive publications. Number 3 is the other auditing publications, other publications, right? This is the most authoritative, and third one is the least authoritative, right? Here you have words like must, required, which are unconditional. Then you have the word should, which is presumptively mandatory. Then you have the words may, might, or could. right? So you must know the difference between this, this, and this, right? This is unconditional, this is presumptively mandatory, and this is just guidance, right? And in 2 and 3 also, 2 and 3 are also kind of guidance, but you must be able to, you must consider them, and you must be able to explain any departure. Explain any departure and how the objective was otherwise achieved, how the standards were otherwise achieved. Okay. So that's pretty much, guys, in M1. Module 1 is over. See, it's a very small, simple module. So like I said in the beginning, during the week, you will go through it on your own. You will not try MCQs on your own. You will just go through it on your own. Next week, I will do MCQs with you, some MCQs, not all. And then, once the entire syllabus is over here, then you will start your revision, and then you will go through it again, do the MCQs, all that, what I explained in the morning, right? In the beginning. So this is your M1. And as you saw, there is memorization involved. Okay, let me quickly take your questions here. So Narendra, interim financials is, we are talking about, let's say if we are talking about 2024, then we are saying whether the 2023 annual are audited or not. Okay, if we are talking about, let's say, Q2 of 2024, quarter 2 of 2024, then we are saying, are the 2023 annual financials, are they audited or not audited? If they are audited and you are doing Q2 of 2024, then you will follow SAS. If the 2023 annual are not audited and you are doing Q2 of 2024, then you will follow SARS. Okay. So Mohan, yes, these are grants, these are federal financial assistance, right? Which a non-government entity can receive from the federal government. And so obviously federal government or state government. So obviously then GAGAS has to be followed. Okay, Mohan. Deepak, thank you. Thanks for that comment. So how to quote appropriate? So what do you, which line are you talking about, Deepak? Okay, Narendra, be able to explain any departure. Be able to explain any departure means basically you have to justify why you have departed, why you have not followed that particular clause, right? So the reason could be so for example, you could not do the stock take. Okay, you could not do the beginning balance. You could not do the stock take at the beginning of the year because you were not even appointed at that time. For example, I'm just giving an example over here. You were appointed in the month of March. Obviously, you had to do the stock take on, January 1st, December 31st of last year, or January 1st of this year. For beginning balances, I'm talking about, okay, opening stock or opening cash balance, etc. So you had to depart from that. Uh, you know, uh, Obviously you could not do it because you were not even appointed at that time. So now you are able to explain that departure. It's a very valid explanation why you could not do the stock take at the beginning of the year, right? So that's a valid explanation. Okay. Okay, so Deepak, for the third, you're saying for the third category, why explanation is required. That's why I said it is slightly counterintuitive. It is, uh, I mean, yeah, these are just, whatever is mentioned in the textbooks. If you have read some book and you have gained knowledge from there, right? You need not follow in the audit, right? You have to follow what is written in the SAS or PCAOB auditing standard, then maybe interpretive. I agree with you, but the requirement is that even if you're departing from such requirement, you should be able to explain it if somebody, if it comes under, let's say a quality review or a peer review, right? You should be able to explain why you did not follow that. Okay. Report issued are appropriate in the circumstances in the quality control standards, right? Appropriate in the circumstances means, as I said, you are issuing the correct report for the correct engagement, right? You should not be issuing a, let's say, if you have followed an engagement under SSAE, you should you should issue a report which is applicable, which is mentioned in the SSAE. Because see, these reports have certain form and format. Okay, so if you are not following the form and format for that engagement, you have done, let's say you have done an agreed upon procedures engagement, but you are issuing an examination report. That will not be appropriate. If you have done agreed upon procedures engagement, you have to issue an agreed upon procedures report, right? Or if you have done a review, you cannot issue an audit report, isn't it? You have not done the audit, you have done a review, but you're issuing audit report. It's not appropriate in the circumstances. Or you have done an audit, but you're issuing a review report, right? Of course, we will talk about a downgrade in service or upgrade in service. That can happen, but we'll talk about it later. Downgrade in service means you were engaged to do the audit, but later the client downgraded the service from an audit to a review. They said, you don't have, please just do the review, right? Whether it is acceptable to the auditor, whether the auditor should accept this or not, we will talk about it later. But that is called a downgrade in service. Upgrade in service could be you were engaged to do a review, but then the client said, please do an audit for us. Okay, that's called an upgrade in service. So we will talk about that. But if there is no upgrade or downgrade, you were asked to do the audit, but you are issuing review report, or you were asked to do a review and you are issuing an audit report, that is inappropriate. Okay, so you have to issue the correct report for the correct engagement, isn't it? Okay, Ravi, your question, why it's mentioned that use professional judgment? Well, professional judgment in SAS or PCAOB, here the thing is that, whether you should follow SAS in a particular engagement or PCAOB, you should be first, very clear. You should be very clear about that, isn't it? Uh, whether it is a listed company, whether it is an unlisted company, whether it is private or public, right? And whether SAS will be applicable to them or PCAOB auditing standard will be applicable to them. You have to be very clear about that. So you have to use professional judgment to accept that engagement, because client may say that please issue us a SAS report, but you might feel, depending on the circumstances, that no, on them PCAOB auditing standards will be applicable, or vice versa, right? So who is a issuer, who is a non-issuer, that we'll talk about later. Once we do that, then you will understand what I'm saying now. That, okay, if they are an issuer, then obviously you have to follow PCAOB auditing standard, right? So you need to know, as an auditor, you need to know which one should be applicable to them, and you have to use professional judgment in deciding that. Is that clear, Ravi? Okay, maybe I'll just throw a question at you. You don't have to answer it right now. Even I will not answer it right now, but just a food for thought. A food for thought. You are doing the audit of an issuer, okay? And its subsidiary. You're doing the audit of an issuer and one of its subsidiaries. The subsidiary is not an issuer company. It's a non-issuer company. But the parent is an issuer company. You are doing the audit of both. Which one will you follow for the subsidiary? Will you follow PCAOB auditing standard, or will you follow SAS? Right? So you have to use professional judgment over there. Of course, you will follow the guidelines, right? But the circumstances, you have to see what the circumstances are, what does the standard say about it, this situation, and apply your judgment. Okay, or vice versa. Vice versa is also possible. The parent is a non-issuer, but the subsidiary is an issuer. That is also possible. Okay, so which one will you follow, SAS or PCAOB? Right, so that's a matter of professional judgment. Okay, Ravi. Okay, fine. So module 2, audit engagements. Audit process overview. So what is the audit process? I'll come to this top part in just a moment. I'm starting from the second layer here. Engagement acceptance, right? That means whether you should even accept the engagement. Whether you should even accept the engagement. So for that, you need to see whether you are following the ethical guidelines. Are you independent of the client? Independence. What are the terms of engagement? Right? So we'll do this in detail, but you need to first determine or decide whether you want to accept the engagement or not. Right? I can tell you that the big fours, they reject a lot of engagements because of the risk perception, the risk profile of the company. If the company has the client company I'm talking about, the client has high risk profile, then they don't take up those engagements. So because they don't, there is something which we often say in audit is that you should never associate yourself uh, with financials that are false, fraudulent, deceptive, or misleading. You should never associate yourself with financials that are false, fraudulent, deceptive, or misleading. And you should never associate yourself with a company whose management lacks integrity, because you will be in trouble, right? So never associate yourself with this, with financials that are false, fraudulent, deceptive, or misleading, or never associate yourself with a company whose management lacks integrity. Okay, so you may decide not to accept the engagement, right? So engagement acceptance is the first point, starting point, I would say, in an audit process, right? If you accept it, then of course you will go to the next step, which is assess the risk and plan your response to the risk, right? So you will do your audit planning, including audit strategy. You will decide the materiality level. You will do your risk assessment procedure. For doing that, you will understand the entity and its environment. You will understand its internal controls. Then you will identify the risk and assess the risk. And then you will respond to the risk. That means you will decide to do certain steps that will take care of those risks, right? So this is once you have accepted the engagement, you have done your risk assessment and planned your response to the risk, then you will start performing. You will actually start doing the audit, perform the procedure, and obtain evidence. So in this, you will do test of controls. If applicable, you will do substantive testing, right? For all those who are doing audit for the first time, let's say, and these terms are not making sense, don't worry, we'll cover all of this in great detail later, right? This is just an introduction. Okay, so you'll do test of controls if applicable, then you will do substantive testing. Then based on your testing, based on your procedures and the evidence that you have gathered, you will form conclusion, right? In forming the conclusion, you will also do subsequent, events, as in what you will do, that we'll talk about later, but you will consider subsequent events. You will take a management representation letter. You will evaluate the results that you have gathered, and you will make sure that the quality control standard has been met, right? That means you have followed the standards. You are going to issue the appropriate report that all the members are independent, etc., etc. So ethical guidelines have been followed, independence is there, quality control standards have been met, policies and procedures have been followed, all that you will ensure, right? You form the conclusion. Once you form the conclusion, of course, you will issue the report on audited financial statements, and any other kind of report for which you have been engaged, other reporting considerations, right? What was the top part? The top part was general principles that you will maintain, right? That means you will document everything, right? Documentation, you will communicate. There are certain communications that you need to make to the management. There are certain communications that you have to do with the with TCWG. TCWG means those charged with governance. There are certain communications that you need to do with the board of directors, all that. So whatever communications need to be done, you will do those. Whatever documentation needs to be done, you will do those. Overall objective, you will follow, obviously you will meet the overall objective of the assignment, right? What is the overall objective? The overall objective, and we'll just see that. But basically, what is the objective in an audit engagement, right? To form an opinion, then obviously express that opinion, to express an opinion, right? To issue the report, not so. First, of course, you'll form an opinion and you'll express the opinion in writing. You will express the opinion in writing. In writing means in the form of an audit report. And to form an opinion, you will have to obtain evidence. Right? What kind of evidence? Sufficient evidence and appropriate evidence. Right? So this is your objective. Objective is to express an opinion, right? Issue the audit report. And to do that, you have to obtain sufficient appropriate audit evidence. Sufficient appropriate audit evidence. Okay. And of course, quality control. So this is the overall audit process. The independent audit function, the basics. The purpose of an audit is to provide financial statement users with an opinion. Now, who are the financial statement users? There are two types of users, primary users and secondary users. Who are the primary users? The basically, if I have to put it in very simple words, whosoever's money is involved is a primary user. Whosoever's money is involved. Investors, shareholders, basically. Shareholders. Even potential investors come in this category. So they have not yet invested money, but they are thinking of investing money, right? Potential investors, lenders, whoever has lent money to the company, and other creditors who, they have given raw material to the company on credit. So their money is also involved. So shareholders, potential investors, lenders, creditors are primary users of the financial statements. Anybody else is a secondary user. That means the Securities and Exchange Commission, the regulators, basically, in one word, regulators, if I say. So for example, Securities and Exchange Commission, you have Internal Revenue, IRS, Internal Revenue Services, the IRS, then any other, right? Any other regulator, tax authorities. IRS is the tax authority. So these are secondary users. researchers, yeah, anybody else, basically other than shareholders, potential investors, lenders, and creditors, anybody else is a secondary user. So purpose of audit is to provide financial statement users with an opinion on whether the financials are presented fairly, in all material respects in accordance with the applicable financial reporting framework. In accordance with the applicable financial reporting framework. Okay, whether the financials are presented fairly. So this is a very important line, and you will see this multiple times in the syllabus, in the, not just in this module, but in the modules that we will do going forward. You will see this statement coming again and again, right? The purpose of audit is to provide financial statement users with an opinion on whether the financial statements are presented fairly in all material respects in accordance with the applicable financial reporting framework. Applicable financial reporting framework. So there are two types of frameworks: general purpose frameworks and special purpose frameworks. Right? General purpose framework and special purpose framework. So US GAAP is a general purpose framework. US GAAP, IFRS, these are all general purpose frameworks. Special purpose frameworks are cash basis of accounting, tax basis of accounting, regulatory basis of accounting. These kind of things. Then there is hybrid. Hybrid means hybrid of, it's a mix of cash and accrual, right? That's called hybrid basis of accounting, right? So these are special purpose frameworks. Contractual basis of accounting. These are special purpose frameworks. So now you are basically expressing an opinion on whether the financials are presented fairly. And the word is fairly. It is not the financials are true, financials are correct, right? The word is whether the financials are presented fairly. What does that mean? We will talk about it, right? In all material respects. Material respects. What is materiality? We'll talk about it, right? In a multi-million dollar or a billion-dollar balance sheet, right? There is something of $10 which is wrong. It is immaterial, right? We will still say that the financials are presented fairly because it is an immaterial amount. Okay, it's a billion-dollar balance sheet and we are saying some $10 or $100 amount is wrong, right? So what we are saying is that they must be presented fairly in all material respects. So what is materiality? That we will talk about later. But in all material respects, it must be presented fairly. Okay, immaterial, we are not concerned. Immaterial to be ignored. Of course, exceptions exist. Exceptions exist. That means on certain items, even if it is immaterial, it is important. It is, we cannot ignore it. Okay, but generally immaterial to be ignored. Only material aspects, I mean, it needs to be presented fairly in all material respect. And of course, in accordance with the applicable framework. Now, obviously, the treatment could be different in different standards. For example, IFRS does not allow LIFO in inventory valuation, but US GAAP allows LIFO. Okay, in India, we call it FIFO, LIFO. In US, they call it FIFO, LIFO. That's just a, pronunciation thing or the way they speak. So IFRS does not allow LIFO, but US GAAP allows LIFO. Now, if the client has followed LIFO and you are doing IFRS, I mean, these are IFRS financials that you are auditing, and the client has followed LIFO, then obviously it's not presented fairly as far as inventory valuation is concerned. But if the client has, this is a US GAAP financial and the client has followed LIFO, right, then it is fine because US GAAP allows LIFO. So it depends on which framework are we talking about, right? So something may be fairly stated in accordance with a certain framework, but it may not be fairly stated in accordance with another set of standards or another framework. right? So it has to be presented fairly in all material respect in accordance with the framework that we are talking about. The framework. And what is applicable to the client? What is applicable framework for the client? Who will decide that? Right? We will see that. But whatever is the applicable framework to the client, I mean, applicable to the client, in accordance with that framework, are the financials presented fairly or not? Is that clear? Now the pass key. The applicable financial reporting framework is the financial reporting framework that is acceptable in view of the nature of the entity. Acceptable in view of the nature of the entity and the objective of the financial statements, or that is required by law or regulation. Simple, very simple, that is required by law or regulation. So if you are a listed company, for example, you are listed with the Securities and Exchange Commission. SEC requires you to submit the financials which are prepared under US GAAP. But SEC also accepts financials which are prepared under IFRS. So if you are a listed company or listed with SEC and you have prepared your financials under IFRS, it's fine. It is acceptable because SEC accepts it, right? If under US GAAP also, it is fine. SEC accepts it. If you have prepared your financials under any other GAAP, for example, German GAAP, and you're submitting to the SEC, that is also fine, provided you are also giving a reconciliation between German GAAP and US GAAP. As long as you are giving a reconciliation, SEC will accept this also. Okay, so we will talk about audits of financial reporting frameworks followed in another country. That means obviously Germany. So if you're doing the audit of financials which are prepared under German GAAP, then what are the requirements? We'll talk about that also in, I think, module 10 of this chapter, 10 or 11. So the point is that applicable framework, whichever is acceptable, whichever is required by law or regulation, right? Acceptable financial frameworks, acceptable financial reporting frameworks include purpose frameworks like US GAAP, IFRS. These are general purpose frameworks designed to meet the needs of a wide range of users. And it also includes special purpose frameworks, right? So for a particular client, they are following the tax basis of accounting because that is acceptable in their circumstances. It is fine. You can do the audit of that, right? The auditor's report gives credibility to the financials. Auditors as a group, independent of management, right? So auditors have to be independent of management, have an objective view, and can report on company's activities without bias or without conflict of interest. Without a report from an independent auditor, company's financials would be meaningless because public would have a little faith in financials issued by the inherently biased company. Right? So that's why an independent third party comes to do the audit, right? And that's why it holds credibility. It gives credibility because the auditors are independent. They are not part of the company. They are not employees of the company. They are independent of the company, right? And they will give an objective view, right? Without any bias or without any conflict of interest. Financials of an enterprise are prepared by management. So who prepares the financials? Prepared by management, not by the independent auditor. So auditor will not prepare the financials. Auditor will audit the financials, right? Further, the financials are the product and property of the enterprise, right? So this can come as a simple MCQ question. Whose property are the financials? Financials are the product and property of the client, of the enterprise, not the auditor. The independent auditor merely audits and expresses an opinion on them, right? So financial statements are the property of the client, are the property of the enterprise. Auditor merely audits and expresses an opinion on them. So now you see what are the management's responsibilities. An audit is conducted on the premise that management, and when appropriate, those charged with governance are responsible for preparation of the financials. See, preparation of the financials and fair presentation of the financial statements is the responsibility of management, right? Auditors are not supposed to prepare the financials for the client. Management is responsible for the preparation and fair presentation in accordance with the applicable financial reporting framework. Then number 2, this is called DIM of IC. DIM of IC. That means design, implementation, and maintenance. DIM, design, implementation, and maintenance of internal controls. Okay, so who is responsible for designing the internal controls? The management. Who is responsible for implementing the internal controls? The management. Who is responsible for the maintenance of internal controls? The management. Right? Relevant to the preparation. So we are talking about not all internal controls of the company. We are talking about only those internal controls here that are relevant to the preparation and fair presentation of the financial statements. Right? We are not talking about whether salespeople are actually going and meeting the client or just whiling away their time in the market. Okay, if there is an internal control on that, we are not talking about that internal control. We are not talking about whether employees are reaching on time, right? We are not talking about all internal controls of the company. We are talking about those internal controls that are relevant to the preparation and fair presentation of the financial statements that are free of material misstatement due to error or fraud. Right? That means it is management's responsibility to prepare financials, to present the financials fairly, which are free of material misstatements, whether it is due to error or due to fraud, it should be free of material misstatement. And it is management's responsibility to design, implement, and maintain internal controls to prevent such errors or frauds so that the financials are free of material misstatement. Right? So all this is responsibility of management. And of course, providing the auditor with access to information. If they don't give access to the auditor, access to information, then how will the auditor do the audit? Right? Then it will become a scope limitation, right? It will become a scope limitation. So they have to provide auditor with the access to information and persons within the entity needed to complete the audit, right? So that is also their responsibility. But I'm not highlighting that one. That is an obvious point. I mean, it's an obvious point. You have to give access to the auditor, right? But these 2 points are extremely important: preparation and fair presentation of financials in accordance with the applicable financial reporting framework, and DIM of IC. But which IC? Only those that are relevant to the preparation and fair presentation of the financial statements that are free of material misstatement due to error or fraud. So, so the preparation and fair presentation of financial statement requires identification of the framework, right? That means who's responsible for identifying which framework is applicable? The management. Okay. Identifying the applicable framework is the responsibility of management. Then, of course, preparation and fair presentation of the financials in accordance with that framework, and inclusion of an adequate description of the framework in the financials. Description of the framework in the financials, including an adequate description, is also a responsibility of the management. Because Preparation and fair presentation of the financials is the responsibility of management, and preparation and fair presentation includes these 3 points. So all in all, these are all responsibilities of the management: identifying the applicable framework, then preparing the financials and fairly presenting the financials in accordance with that framework, and including a description about the framework in the financial statements. And apart from that, DIM of IC and providing auditor with the access. Okay. So let's just connect these 2 points. Preparation and fair presentation requires okay, so those were management's responsibilities. What are auditors' responsibilities? Expressing an opinion based on the audit, based on the audit. Now, this might seem very obvious, but there's a deeper meaning to this. Auditor is responsible for expressing an opinion on the financials based on the audit. That means without doing the audit, you cannot express an opinion. Just because, let's say, it is your friend's company or your friend's father's company, right? You are expressing an opinion without doing the audit. No, you cannot do that. So auditor is responsible for expressing an opinion on the financial statements based on the audit. The auditor is also responsible. That means you have to actually conduct the audit to express an opinion, right? The auditor is also responsible for maintaining professional skepticism. What is professional skepticism? We will talk about it in just a moment. Complying with the relevant ethical requirements, right? Code of professional conduct. Exercising professional judgment throughout planning and performance of the audit, right? So you have to exercise professional judgment. Of course, obtain sufficient appropriate audit evidence. Otherwise, how are you going to express an opinion, right? You have to first gather evidence, and the evidence must be sufficient and appropriate. And of course, you have to comply with GAS. And GAS here means SAS or PCAOB, depending on whether it's an issuer or a non-issuer. SAS for non-issuer, PCAOB AS for issuer. You have to follow these standards, right? So you have to comply with GAS, you have to obtain sufficient appropriate audit evidence, you have to exercise professional judgment throughout the audit, throughout planning and performance of the audit. That means basically throughout the audit, you have to exercise professional judgment. Of course, you have to comply with the relevant ethical requirements. You have to maintain professional skepticism. These are the 5 responsibilities. Of course, most important is expressing an opinion. So let's go one by one, talk about these 5 things. The auditor should plan and perform the audit with professional skepticism. Professional skepticism is what? It is an attitude that auditor must apply when making professional judgments that provides the basis for auditor's actions. Professional skepticism is necessary to the critical assessment of audit evidence. So, first of all, professional skepticism is what? It is an attitude that auditor must apply. Now, what does this attitude mean? It means that the auditor should be alert for evidence that contradicts other evidence. Okay, evidence that contradicts other evidence. Mr. A said something, Mr. B is saying something else. One, they're contradicting, or the paper is, Mr. A is saying something, but the document is saying something else. It is contradicting. So now you must be alert. You must become alert that something is wrong, right? So that is professional skepticism, basically keeping your eyes and ears open, right? Not just, so there are certain, certain phrases that we use in audit very often. And this is, I'm just sharing with you. This is not there in the book. You don't have to write it anywhere. But basically, an auditor basically should not take the client at face value. Should not. That means we use the word called trust, but verify. That means fine, trust what they're telling you, but verify it. Also, we use the words like an auditor should never go with a preconceived notion that there is no fraud, that, okay, fine, that there is fraud, or that there cannot be a fraud in this company. There cannot be a fraud. Auditors should never go with a preconceived notion like this. Either of them is really bad. You should never think that there is definitely a fraud in this company, because if you go with that notion, then you will end up doing an inefficient audit. Because if you're going with this preconceived notion that there is definitely a fraud in this company, you will do more audit than required. You will do an over audit. Right? So think of a situation where there was no fraud. There was no fraud, but you went with the notion that there is fraud. Now, because you think there is fraud, you are testing more. You are doing more tests than required. Okay, so you are doing you're overkilling it. You will be inefficient. An audit that should have been done in 15 days, you have probably taken 60 days to complete it. Or whatever, double, 30 days to complete it. Right? So it will end up in an inefficient audit, and you will end up finding nothing because there was no fraud. So you will not find anything. Ultimately, you will give a clean opinion, but you would have spent double or triple the time because you went with a preconceived notion that there is definitely a fraud here. So preconceived notions are bad. The other extreme is also bad. The other extreme is you are going with a preconceived notion that there is definitely a fraud, that there cannot be a fraud in this company, right? There cannot be a fraud. Now, if you're going with that notion, now suppose there is a fraud in the company, but you have gone with the notion that there cannot be a fraud. So you are probably not doing the audit. It is an ineffective audit. You are not doing the audit properly. You're not looking at things that you should have looked at, right? So it is an ineffective audit, and both are bad. Inefficient audit is also bad. Ineffective audit is also bad, right? So you have to maintain a balance. Now, of course, out of the two, inefficient is still okay. Out of the two, I'm saying, ineffective is definitely not okay. Because in ineffective, what will happen is you will end up giving a wrong opinion, right? You have overlooked certain things which you should have dug deeper, right? So if you have overlooked those things, you have not caught the fraud. Because you thought there cannot be a fraud in this company. This management is of high integrity. They cannot do fraud, right? I know these people from the last 10 years. We have been doing the audit for last 5 years. We know them for last 10 years. We have, whatever. They are all very, very clean people, very high integrity people. They cannot do fraud. So if you went with that notion, but there was actually a fraud, then obviously you have given a wrong opinion, right? You have given a clean opinion when actually it was not clean, right? So it is an ineffective audit. This is even more dangerous for you as an auditor for your practice. It's very, very dangerous. Here, yes, you will end up probably not making money. That's the only impact it will have, right? You will end up, you have an audit that you should have finished in 15 days, you have finished in 30 days, you have spent more man hours, so maybe, it's not a very profitable thing for you. That's okay. That is still bearable, isn't it? but giving a wrong opinion is not. I mean, it can lead you in trouble. So, preconceived notion that there is fraud or there cannot be fraud, auditors should not go with a preconceived notion. Auditors should perform their standard procedures, right? This is another line I'm telling you. Auditors should perform their standard procedures, perform standard procedures. But if the auditor comes across something suspicious, okay? If the auditor comes across something suspicious, then auditors should extend their procedures to confirm or dispel their suspicions. That means don't go with a preconceived notion. You follow your standard procedures. But while performing your standard procedures, if you come across something suspicious, then extend your procedures. Then extend your procedures to confirm your suspicion that yes, what we thought was correct, or to dispel your suspicion. What we thought is not correct. We just thought that something is wrong, but it is not, because you have extended your procedures to confirm that or dispel your suspicion, right? So, these are some of the things. Don't take the client at face value. Trust, but verify. Verify whatever they are telling you. Don't go with a preconceived notion. Perform your standard procedures. Extend your procedures if you come across something suspicious to confirm or dispel your suspicions, right? So all these are very typically used in audit firms. If you're from an audit background, you would know what I'm talking about. So be alert for evidence that contradicts other evidence, information that calls into question the reliability of documents, responses to inquiries, conditions that indicate possible fraud, circumstances that suggest need for audit procedures in addition to those required by GAS. Like I said, if you come across something suspicious, you may have to do extended procedures. So audit procedures in addition to those required by GAS. Audit evidence that may impact auditors' consideration of initial identification and assessment of risk of material misstatement. Right? That means initially when you started the audit, you did your risk assessment and you set your materiality levels, right? But as you've progressed in the audit, you felt that no, our risk assessment was wrong. We need to go back and revisit and revise it. You may have to do that. And based on that, you may have to revise your materiality levels. Okay, lower it maybe. You may have to do that, right? So all that is covered under professional skepticism. Consideration of initial identification and assessment of risk of material misstatement. Okay, so again, you don't have to memorize it as such, but if you see a multiple choice question with some language of, this kind, then you would know that they are talking about professional skepticism. It is a question on professional skepticism. The word attitude, the word alert, the word contradict, evidence that contradicts other evidence, reliability of documents, possible fraud, additional procedures required, or reassessment is required, right? Consideration of initial identification and assessment of risk. So all this is part of professional skepticism. Auditors should neither assume that management is dishonest nor assume unquestioned honesty. Both extremes are bad. Don't assume that they are dishonest. Also, don't assume that they are absolutely honest, unquestioned honesty. Right? Either extremes are bad. A belief that management is honest and has integrity does not relieve the auditor of the need to maintain professional skepticism. So even if you believe that the management is honest, That does not mean you can let your guards down. You still have to follow everything. You still have to be alert, on 5 things. Or allow the auditor to be satisfied with less than persuasive evidence. You cannot, right? Even if you believe that management is honest and has high integrity, does not relieve you from this. You still have to obtain persuasive evidence. You cannot settle with less than persuasive evidence. Cannot be satisfied, right? Not be satisfied with less than persuasive evidence. Impediments to acting with professional skepticism. So impediments means what can come in the way of you not showing that attitude or not conducting the audit with professional skepticism. What can come in the way? Auditors should act with professional skepticism throughout the audit. However, auditors often feel challenged to meet this requirement because of impediments to applying. What are the examples? Unconscious human bias. Unconscious human bias, which may cause the auditor to evaluate and recall information that favors the interest of the client over the interest of the investor, or favors evidence that corroborates rather than contradicts the existence of risk. That means, we all, of course, have an unconscious bias. We tend to like some people, we tend to dislike some people because of our past experience or because of whatever, whatever reason could be anything, but we tend to believe something, we tend not to believe something, we form biases in our mind, and it is at a very subconscious level. Even we don't realize it. Okay, now those biases may become an impediment. That means, where you should have exercised professional skepticism, but because of this bias that you like this person, right? You like this person, and so whatever this person says, you tend to believe, can prevent you from exercising professional skepticism. Because you like this person, you respect this person, uh, for whatever past experience, it could be any experience, right? Maybe that person is an elderly person, almost fatherly like, right? Person. So obviously, and that person demonstrates certain kind of behavior that that you feel that that you need to respect that person, and so you basically tend to believe that person. So now whatever that person is saying, you tend to believe it, right? You are not exercising professional skepticism. You have let your guards down, right? And that is dangerous. So, and I'm not saying that the person is not a genuine person. Maybe that person is actually very genuine. But still, you cannot, not exercise professional skepticism. Okay, you have to still exercise your professional skepticism. You still have to corroborate whatever he's saying with other documents or with other evidence. Okay, so unconscious human bias. Similarly here, kind of connected points, development of an inappropriate level of trust or confidence, inappropriate level of trust or confidence in someone, in the management or in someone in the management, right? Which may result in auditor not taking a questioning stance, okay, or as questioning a stance as needed, right? So you inappropriately, you have a deep level of trust on someone or confidence in someone, right? That can also prevent you from exercising professional skepticism. Then, of course, pressure to avoid potential negative interactions. Maybe this client that you are auditing is your future dream company. Probably you are auditing, Tesla, and you want to join Tesla. So now when you're auditing Tesla, you don't want to confront the management. You don't want to be in a situation where they will not, where your chances of future employment gets killed, right? So you don't want to get into that situation. So obviously you will not confront or you will not question them the way you should have otherwise, right? So pressure to avoid potential negative interaction with or consequences to individuals whom auditors know instead of representing the interest of investors, right? So I think this much is enough. Fourth, scheduling and workload demands. You don't have time to go into details, right? An audit that should have been completed in 20 days, you are having to complete it in 7 days or 10 days, half the time. Then obviously you cannot. Scheduling and workload demands. Making shortcuts, right? Evidence that is easier to obtain. You are taking those evidence, you're gathering those evidence that are easier to obtain rather than those that are more reliable and relevant. Not considering contrary evidence. Okay, so these are some impediments to exercising professional skepticism. This was your first point. First point here, maintaining professional skepticism. Now we'll go to the second point, complying with relevant ethical requirements. The auditor should comply with the ethical requirements related to financial statement audit engagements, including independence in both fact and appearance. You must be independent in fact, in reality, and also in your appearance, right? You must be seen as independent by an onlooker, by a third party who's observing you. You must actually be independent and also appear to be independent to an onlooker. So ethical requirements include the AICPA Code of Professional Conduct, rules of the state boards of accountancy, and applicable regulatory agencies that are more restrictive. Okay, so basically we are talking about the Code of Professional Conduct, but also the rules of the state boards of accountancy. I hope you know that there are different state boards of accountancy, right? Obviously, you are registered from a particular state board. It could be Montana, it could be California, it could be whatever, New York. So there are separate, different state boards of accountancy. They come up with their rules. So ethical requirements not only mean you have to follow the code, AICPA's Code of Professional Conduct, but you also have to follow the rules of the state boards of accountancy and any other applicable regulatory agency. Applicable regulatory agency, example could be Department of Labor, Government Accountability Office, right? These are some examples. Applicable regulatory agencies, okay? Passkey, the auditor must be independent of an entity when performing an engagement in accordance with GAS, unless GAS provides otherwise. If GAS says that, okay, you can do this engagement, even if you're not independent, then that's fine. But otherwise, the general rule is that you must be independent. Unless GAS provides otherwise, or auditor is required by law or regulation to accept the engagement. Right? So auditor must be independent, must. See, must means unconditional requirement. So auditor must be independent unless GAS provides otherwise, or auditor is required by law or regulation to accept the engagement. Professional judgment, right? So ethical requirement here, it was very small, but we will do it in detail in A6. And ethical requirement is something which is a heavily tested area. When we do in detail, you will see there are lots of things here. We'll talk about AICPA's Code of Professional Conduct. We'll talk about many other, rules. The SEC rules, the SOX, Sarbanes-Oxley Act. We'll talk about Department of Labor. We'll talk about Government Accountability Office. Lots of things we'll talk about in A6. And it's a heavily tested area, ethical requirements. Third is exercising professional judgment. Professional judgment. The auditor should exercise professional judgment in planning and performing the audit. That means throughout the audit. Professional judgment is necessary because auditor requires interpretation of ethical requirements and gas, as well as informed decisions based on applicable knowledge, application of knowledge and experience, right? So it is not just judgment, it is professional judgment, right? That means based on knowledge and experience, not not whims and fancies, not whims and fancies, or not what we sometimes call as gut feel, not gut feel. Okay, it is a judgment based on knowledge and experience. In an audit, professional judgment is necessary when making decisions about materiality, about audit risk, nature, extent and timing of the audit procedures, whether sufficient appropriate evidence has been obtained, management's judgments in applying the framework, drawing conclusions based on audit evidence obtained. All these places you will need judgment, right? Materiality, whether we should have the materiality at $100,000 or at $120,000, it's a matter of judgment. Audit risk, what is audit risk? We'll talk about it in detail later. Audit risk consists of three things: the inherent risk, control risk, detection risk. IR into CR into DR is called AR, audit risk. So audit risk is IR into CR into DR. And here the judgment will be only in case of swell. Okay, fine. Judgment will be in assessing IR, in assessing CR, and in determining DR or deciding DR. See, DR is the only thing, detection risk is the only thing that the auditor decides. IR and CR are not what auditor decides. IR and CR are already there in the company. There is an inherent risk. There is a control risk that exists. Auditor only assesses how much it is. It already exists. Auditor only does an assessment. And if IR and CR are high, we'll talk about auditors in detail later. If IR, CR are high, then DR has to be low to keep the audit risk at low, isn't it? To keep the audit risk low, if these two things are already high, then detection risk has to be low, right? So how much is IR, whether it is high or low is a matter of judgment. How much is CR, is it high or low is a matter of judgment. And based on this, how much should you keep your DR at, right, is also a matter of judgment. Okay, so judgment is involved. Then the nature of the procedures, what kind of audit procedures you should perform. Extent means how much you should perform, and timing is when you should perform, right? When means whether you should do it, a particular procedure at year end, or should you do it at an interim stage, right? So the timing of the audit procedures. So nature, extent, and timing are all matters of judgment. Then the evidence that you have gathered, is it sufficient? Is it appropriate? Is also a matter of judgment. Then whether the management has applied the applicable financial reporting framework is a matter of judgment, right? So you will apply your judgment to decide whether the management has applied the correct framework or not. And finally, the conclusion. Should you express an unmodified opinion or should you give a qualification? What kind of conclusion should you draw, or what kind of opinion should you form or express is also finally a matter of judgment, right? So judgment is involved at multiple places and throughout the audit. Planning and performing means throughout the audit, judgment is involved in all these places. So that was your third point in auditor's responsibilities. Fourth point is obtaining sufficient appropriate audit evidence. And remember, these words, sufficient and appropriate, are always used with the word evidence. The word reasonable is not used. The word, reasonable is used with the word assurance, reasonable assurance, not reasonable evidence. You can get a simple theory question about this. What is the word used with evidence? A, B, C, D. They'll give 4 words, obviously, 4 different words. The answer is sufficient, appropriate. Sufficient, appropriate is the correct answer. Okay, which is the word used with assurance? Answer is reasonable. Okay, so these are some words that are used in a certain context. So you must know the context here. The context is whether the audit evidence is sufficient or not, whether audit evidence is appropriate or not. So to obtain reasonable assurance, see the word reasonable is used with the word assurance. To obtain reasonable assurance, the auditor should obtain sufficient appropriate audit evidence to reduce the audit risk to an acceptably low level. See, audit risk can never be zero. Audit risk can never be eliminated. Audit risk can be minimized. You can reduce it to an acceptably low level. Acceptably low level means the level that you are willing to accept. Because ultimately you have to accept some audit risk because it can never be zero. Okay, so as I said, audit risk is, and we'll do it in detail later, IR into CR into DR. Now suppose the acceptable level is suppose 8. Now if the acceptable level is 8, this is already 2 and 2. So 2 into 2, 4. Detection risk has to be 2. But if this is already 8 and this is 1, this has to be 1. That means as the IR went up from 2 to 8, detection risk had to come down from 2 to 1. Because you want to keep the audit risk at a certain level. You don't want to exceed by more than 8. So 2 into 2 into 2 is 8. 8 into 1 into 1 is also 8. If this is 4 and this is 1, then you can again keep it at 8, at 2 to keep it 8. If this is 4 and this is 2, then you have to keep it at 1 to keep it 8, and so on, right? On the other hand, if these are 1 and 1, you can keep the detection risk at 8. Right. So as you can see here, if the IR and CR are low, and by the way, IR and CR combined, IR into CR combined is known as risk of material misstatement. This is called RMM, risk of material misstatement. So as you can see, if IR and CR, that means RMM, risk of material misstatement is low, detection risk can be high. If IR and CR are high, that means the risk of material misstatement is high, detection risk has to be low. So there is an inverse relationship between RMM and DR. If RMM is high, detection risk has to be low. If RMM is low, detection risk has to be high. But when we say that there is an inverse relationship, we are assuming here that the auditor wants to keep the audit risk at a certain level. Obviously, if you want to keep the audit risk at 8, if you want to maintain it at 8, then this becomes applicable that if RMM is high, DR has to be low. If RMM is low, DR can be high if you want to keep it at 8. So we are saying that this relationship of RMM and DR is in the context of audit risk, how much the audit risk the auditor is willing to take. Here in this example, auditor is willing to take 8 as the audit risk. Now suppose if the auditor decides to take audit risk as 4, and let's take the first example, 1 into 1, then detection risk has to be 4. It cannot be 8 anymore. If I take the second example, 8 into 1, now detection risk has to be 0.5. Isn't it? So to keep the audit risk at a certain level, if you want to maintain this level, then you will have to play around with this. If RMM is high, audit risk has to be low. If RMM is low, audit risk has to be, detection risk has to be high, and so on, right? So in the first row here, RMM is low, so DR is more, it's 4. In the second example, RMM is high, so DR is less. Inverse relationship. Okay. To obtain reasonable assurance, auditors should obtain sufficient appropriate audit evidence to reduce the audit risk to an acceptably low level, and thereby enable the auditor to draw reasonable conclusions on which to base the auditor's opinion. Now, how much is acceptable to the auditor is also a matter of judgment, right? How much you are willing to accept is a matter of your judgment, right? So judgment is involved at every place in the audit, every step in the audit. Okay, then, so this is your fifth point also done. Sorry, fourth point. Fifth point, which is the final point, is complying with gas. Complying with gas. Compliance with gas. Auditor should not represent compliance with gas in auditor's report unless the auditor has actually complied with all the gas. That means you cannot say that we have complied with gas. You cannot say we have complied with gas if you have actually not complied, right? That means only if you have complied with all gas, has complied with all gas, only then can you say that we have complied with gas. If you have not, then you cannot say we have complied with gas, okay? So auditor should not represent compliance with gas unless auditor has actually complied. Actually, the word actually is not written. I am saying it, that auditor has actually complied with all gas. Only then they can write that they have complied with gas. Otherwise, you cannot write it. That means obviously you cannot tell a lie. If you have not followed something, how can you say I have followed this, right? So you cannot tell a lie in your report, right? If the objective of a relevant gas section cannot be achieved, the auditor should consider whether this prevents the auditor from achieving the overall objective of the auditor and thereby requires the auditor in accordance with gas to modify the opinion or withdraw from the engagement. That means if you have cannot be achieved, if you have not been able to comply with gas, then either modify your opinion or withdraw from the engagement. So you can imagine how important it is to comply with gas. Obviously, you're doing an audit, you have to do the audit in accordance with gas. You have not followed gas, you cannot. So either you will have to modify your opinion or you have to withdraw from the engagement. Okay. Now, in certain audit engagements, auditor may be required to comply with other auditing requirements in addition to gas. Gas do not override laws or regulations that govern an audit of financials. Auditor may conduct the audit in accordance with both gas and auditing standards issued by PCAOB, ERISA, ISA's International Standards on Auditing, gas, or any other country's auditing standards. So what this means is that gas has to be followed. You may have to follow gas and something else in certain engagements. So let's take a simple example. You are a company, your client is a company that has received federal financial assistance. Federal financial assistance. So suppose because you are in a federally declared national disaster area. So for example, you are in Florida. Your client is in Florida, which is hit by tornadoes. So it is declared as a disaster area, federally declared disaster area. And you get federal financial assistance for that. Now, this is your client, which gets this. You are doing the audit. The audit has to be done both as per gas and gas, because you receive your client receives federal financial assistance. So gas is also applicable now. So both gas and gas, right? So it has to be both. So this was just an example. Similarly, there could be other examples. But the point here is that it is in addition to gas. That's why I have highlighted in addition to and the word both. To and the word both. Both gas and something else is fine. Gas has to be there. Gas has to be followed. Okay. Then the next point, reasonable assurance and inherent limitations of an audit. Reasonable, as I said, the word is reasonable. When it comes to assurance, we always use the word reasonable. When we talk about evidence, we always use the word sufficient and appropriate. Okay. So here we are talking about reasonable assurance. In order to express an opinion, auditor obtains reasonable assurance about whether the financials are free from material misstatement, whether due to error or fraud. It is a reasonable assurance. What is a reasonable assurance? Is a high but not absolute level of assurance. Reasonable assurance is high. It's a high level of assurance, but it is not absolute level of assurance. Okay. In order to obtain reasonable assurance, auditor must plan the work and properly supervise any assistants, determine and apply appropriate materiality levels, identify and assess risk of material misstatement, whether due to fraud or error, and obtain sufficient appropriate audit evidence. Okay. So obviously, to express an opinion, you need to gather evidence. The evidence must be sufficient and appropriate. So first of all, to express an opinion, you must obtain reasonable assurance. And to obtain reasonable assurance, you must obtain sufficient appropriate evidence, right? In order to express an opinion, you must obtain reasonable assurance. To obtain reasonable assurance, you must obtain sufficient appropriate audit evidence. But not just obtain sufficient appropriate audit evidence, you must also plan the work and supervise your assistant's work. You must also determine the materiality levels. You must also identify and assess the risk of material misstatement. Risk of material misstatement is IR into CR. Inherent risk and control risk. And means not plus here, and I'm using the word and. Basically, it is into multiplication. IR into CR is RMM. So you must identify the risks. What are the inherent risks in this company? What are the control risks in this company? Right? And whether due to, risk of material misstatement in the financials, right? Whether due to error or fraud. So whether could be anything, whether could be error, whether it is due to error, whether it is due to fraud, whether it is due to any other XYZ reason. Point is that you have to identify and assess the risk of material misstatement. What are the risks that there are material misstatements in these financials? Or there could be material misstatements in these financials. What are the risks? So you must identify the risk, because only if you identify, you will be able to respond to that risk accordingly, right? So to an opinion, you reasonable assurance. To obtain reasonable assurance, you must obtain sufficient appropriate audit evidence, but not just that. You must also plan the work and properly supervise the work of your assistants. You must determine and apply appropriate materiality levels. You must identify and assess the risk of material misstatement. Okay, these are the things you need to do to obtain reasonable assurance. And even after doing all this, you will get a high level of assurance, but not absolute. Not absolute. Why not absolute? Why? Why can't you obtain absolute assurance? Look at the next paragraph. The auditor is unable to obtain absolute assurance that the financials are free from material misstatement because there are inherent limitations. Because of inherent limitations. What are the inherent limitations? Nature of financial reporting. Some financials are subject to inherent level of variability because they involve judgment. They involve judgment. Whether the life of fixed assets will be 5 years or 10 years or 7 years or 4 years is a matter of judgment, and your depreciation will change accordingly, right? Whether provision for warranty liability is done because it is done based on an estimate. How many cars will come for repair? If you're an automobile manufacturing company, you are selling cars, right? How many cars will come for repair in the next 3 years if there is a 3-year warranty? Is a matter of judgment, right? Based on that, you are determining your provision for warranty liability. How many accounts receivable parties will not pay up? Based on that, you are determining your allowance for uncollectibles. So there are judgments involved. There are subjective decisions involved in the preparation of financials. There is degree of uncertainty, right? So that is one inherent limitation. Second, the nature of audit procedure itself is an inherent limitation. Why? Because there are legal limits, practical and legal limits to an audit. You are not an investigator. You are not doing an investigation. So you cannot cross your boundaries, right? There is a certain boundary within which you have to operate. You cannot start doing an investigation, right? So there are practical limits, legal limits on an auditor's ability to obtain evidence. Possibility that management or others may not provide intentionally or unintentionally the complete information that is needed for the preparation and fair present, right? Fraud may be concealed in such a way that it is difficult to detect. Fraud is always accompanied by acts to conceal the fraud. Fraud is never left open for the auditors to come and detect. Whoever is doing the fraud will try his or her best to hide it, isn't it? So therefore, detecting a fraud becomes even more difficult because it is not lying open. Error is easier to detect because the person who has done it by mistake. There was no intention to do it. Therefore, the person probably does not even realize that the person has committed an error. So it is easier to detect an error. But fraud is difficult to detect because the person who has committed the fraud has done it intentionally, obviously will not want to get caught, and therefore will try every possible thing to conceal it, to hide it. Right? Third, audit is neither an investigation into a wrongdoing, nor does the auditor have specific legal powers to do an investigation. Right? So there is a very famous British line. Uh, uh, so this line was used in a British court of law, that an auditor is a watchdog, not a bloodhound. And this line became so famous that this line is used all over the world in the context of audit or in the context of auditors. Auditors are watchdogs; they are not bloodhounds, right? So basically, what that line basically means is this: audit is not an investigation. So auditor is not an investigator, right? No, so auditor does not have specific legal powers. So therefore, because of these inherent limitations, the evidence that you're obtaining, or the assurance that you are obtaining, is not absolute assurance. Okay, it is uh, it is definitely high level of assurance, but it is not absolute. So let's just highlight this. Management or others may not provide complete information. Fraud may be concealed. Audit is not an investigation, neither an investigation nor auditor has specific legal powers. Then, of course, the pressure of time, right? You have to finish the audit in 10 days. So obviously, you are doing the audit of the entire year in just 10 days time, or whatever, 15 days time, right? So that itself is a limitation, is a very big limitation. There's an expectation by users that auditor will form an opinion on the financials within a reasonable period of time and will achieve a balance between benefit and cost, recognizing that it is impracticable to address all information that may exist. Therefore, it is necessary for auditor to plan the audit so it is performed effectively, direct the efforts to areas most expected to contain risk. So what should the auditor do basically? The auditor should direct the efforts to areas which are expected to contain risk of material misstatement, right? Identify those areas and focus more on those areas where there is a risk of material misstatement. If you think that there is, in a particular area of the audit, there is no risk of material misstatement, focus less and focus more time on areas where there is risk of material misstatement. And let me tell you that revenue is one area, revenue recognition is one area that is considered a high risk area in every audit engagement. Every audit engagement. Revenue recognition is a very high risk area in every audit engagement. Okay, then use testing and other means of examining populations for misstatements. That means do sampling. You can't test everything, right? So use testing and other means of examining. Then the next point, determine the nature and scope of the engagement. The following should be considered as the auditor, the audit committee and management determine the appropriate nature and scope of the engagement. Auditor may be hired to perform an audit for a single period or multiple periods. Both are fine, right? You can be asked to do the audit of only 2024 financials, or you can be asked to do 2024 and 2023, right? Comparative, multiple periods. Audit may be on complete financial statement or a single financial statement. That means you may also be asked to just do the audit of the balance sheet. That's all, just the balance sheet. Or you may be asked to do the audit of the complete financial statements. Complete means 5 things: balance sheet, statement of, which is called statement of financial position, then statement of income, which is P&L. So statement of financial position, statement of income, statement of cash flows, statement of comprehensive income, and statement of changes in owner's equity, right? Of course, plus the notes. Notes are always an integral part of the financials. So complete set of financials. Complete set means 5 things plus notes. Or you could be asked to do just a single financial statement, just do the audit of the cash flow statement, just do the audit of the balance sheet, or just do the audit of the income statement. That's all, right? So single financial. Or you can also be asked to do the audit of just a specific element or account or an item of the financial statement. Just do audit of AR, accounts receivable, right? Or just do audit of stockholders equity section, right? So you can be asked to do audit of a specific element, account, or item. Many audit firms are hired to perform tax services in addition to audit services. That means it is allowed to do tax services in addition to audit. We will see later what kind of services are allowed along with audit and what kind of services are not allowed along with audit. So tax is something which is allowed along with audit, right? You can also be the tax practitioners or tax filers for your audit client. Okay. So first of all, you have to determine the nature of the engagement. You have to sit down with the client and understand what is their requirement. Do they want you to do the complete set, audit of the complete set, or just a single financial statement? Do they want you to do 1 year, single period, or any other services like tax services? Now, when auditing non-issuers, the auditor must determine if an audit is most appropriate engagement, or whether a review, compilation, or preparation may be more appropriate, right? So you have to understand, sit down with the client and understand why are they getting the audit done? What is the requirement, right? Or just a review or a compilation or preparation may help, may just do the work, right? So what is the need of the audit engagement? So why are they getting it done? So auditor must determine if an audit is most appropriate, or whether a review, compilation, or preparation may be more appropriate. If an audit is needed, non-issuers have the choice of financial statement audit only or an integrated audit. Integrated audit means where two opinions are rendered. One opinion on the fairness of the financials and one opinion on the operating effectiveness of internal controls. Operating effectiveness, please mind this word, operating effectiveness of internal controls. So we are not talking about whether the design of internal controls is appropriate. We are saying whether the internal controls are operating effectively. Okay. So by design, I mean in a very simplistic way, suppose this is your office and there is a security guard sitting here. That is the design part of it, that you have a security guard at the main entrance. But is it operating effectively? Can anyone enter and guard does not even ask a question? He's just sitting there idle, right? So the design is there, but it is not operating effectively. On the other hand, if the guard stops the person, asks, who are you here to meet? Okay, then calls up that person, that so-and-so has come to meet you. Have you called, are you actually meeting this person? The person says, yes, let him in. Then the guard makes the person fill a whatever register, give out all the details, and then lets the person in. right? So compared to the first one where the design was there, but implementation, the operating effectiveness was not there. Operating effectiveness was not there. Design was there in the first example. In the second example, design is also there. Operating effectiveness is also there. So in the integrated audit, the auditor is not going to comment on the design part of it. The auditor is only going to comment on the operating effectiveness part of it. Okay. Not going to comment on the design part means whether having a security guard is good enough or whether they should also have a CCTV camera. That is the design part. Auditor is not commenting on the design part. Auditor is commenting whatever control is there, is it operating effectively or not? Okay. Of course, this example that I gave is not a example of internal control over financial reporting. This is just an internal control, right? A general internal control about, let's say, safeguarding of assets, or because if a stranger gets into the office, then they can maybe take things out of the office, they can steal database, right? So maybe this can come under safeguarding of assets or safeguarding of data, or general safety and security. But this is not an internal control over financial reporting, right? But this was, I just gave this example to make you understand the difference between design and operating effectiveness, right? So in an integrated audit, two opinions will be rendered, one on the financial statements and one on the operating effectiveness of IC. And financial statements, what? The fairness, whether it is fairly presented or not. Everywhere you will see the word fairness, right? We are not talking about true, correct, accurate. We are not using those words. Are the financials true, correct, accurate? We are not using those words. We are using the word whether the financials are presented fairly. Okay. So non-issuers have a choice. They can just get a financial statement audit done, or they can get an integrated audit done where you have to render two opinions. For issuers must perform an integrated audit. Issuers must perform an integrated audit. They don't have a choice. They have to get an integrated audit done. And by the way, remember one thing, integrated audit does not mean two different CPA firms are giving two opinions. One CPA firm is giving an opinion on financials, another CPA firm is giving an opinion on operating effectiveness. No. Integrated audit means the same CPA firm is giving two opinions, one on the financials and one on the operating effectiveness of IC. And which IC? Over financial reporting. We are not talking about all internal controls. Only those internal controls that are relevant to the preparation and fair presentation of the financials. That means financial reporting. Issuers don't have a choice. They have to get an integrated audit done. And I just told you what integrated audit means. The same CPA firm is expressing two opinions, not two different CPA firms. Okay. Then this fourth point is very simple. Actually, overall objectives of audit engagement. Simple because we have already covered it. Overall objective are to obtain reasonable assurance about whether the financial statements are as a whole are free from material misstatement, whether due to error or fraud, which enables the auditor to express an opinion, right? So once you obtain reasonable assurance, you will be able to express an opinion on whether the financials are presented fair in all material respects in accordance with the applicable financial reporting framework. So this part we had already seen earlier, right? Express an opinion up to this, express an opinion on whether the financials are presented fairly in all material respects in accordance with the applicable financial reporting framework. Now, of course, to express an opinion, you need to obtain reasonable assurance. What do you need to obtain reasonable assurance on? About whether the financials as a whole are free from material misstatement, right? As a whole, financial statements as a whole. As a whole means holistically, overall. Maybe one part of the financials, one account may not be free from material misstatement, but overall as a whole, it is free from material misstatement. Okay. Overall as a whole, they are free from material misstatement. whether that misstatement is caused due to error or fraud, it should be free from material misstatement. Right? We are not saying that, okay, misstatements due to error are fine, misstatements due to fraud are not fine. No, we are saying no misstatement, free from material misstatement, free from material misstatement, whether it is due to fraud, whether it is due to error, it should be free from material misstatement. So auditor has to obtain reasonable assurance with misstatement. Then the auditor will be able to express an opinion that the financials are presented fairly. Okay. And to report on the financials, of course, that is the objective. To report. To report means obviously you can't give a verbal expression. You can't give a verbal opinion. You have to give it in writing in the form of a report. So the objective is to give report on the financial statements and communicate as required by GAS based on the auditor's findings. So you have to also communicate the report. You can't just make the report and keep it with you. Right? So you have to first form an opinion, then express that opinion in writing. That means basically you have to make a report and then you have to communicate this report. You have to issue this report. And of course, if you take a step back to form this opinion, you have to obtain reasonable assurance. Right? To obtain reasonable assurance, we saw there are 4-5 points that you need to do. You have to obtain sufficient appropriate audit evidence. You have to plan the work and supervise the work of your assistants efficiently. Right? So there were 4-5 points that you need to do to obtain reasonable assurance. So this is the whole thing. And as you can see here, there is quite a bit of memorization involved. And when I said in the morning that you have to close the book and try and think what all was there in the module, you should be able to recollect, right? Anyways, I'll talk about it before ending the class. Let's just see if anything else is there. Yes, there is. So there is one. That's it. One more page left. Let's quickly finish it. Objective of audit of ICFR. So if you're doing an integrated audit, right, then you also have to express an opinion on the operating effectiveness of internal control over financial reporting, correct? So what are the objectives of that audit? Issuers are required to have an integrated audit of financials and internal control over financial reporting. In some cases, non-issuers and governmental entities may also have an audit of ICFR. Overall objective of auditor when conducting audit of ICFR are express an opinion. Here also you have to express an opinion, but on what? On the effectiveness, operating effectiveness of the company's internal control over financial reporting. And of course, plan and perform the audit to obtain appropriate evidence. That is sufficient to obtain reasonable assurance. Again, similar language about whether, but here rest of the language is not same, about whether material weaknesses exist as of the date specified in the management's assessment. That means, are there any material weaknesses in the internal control over financial reporting? So we will see some words later in a later module. We will see that there is something called significant deficiency in internal control over financial reporting, ICFR. Significant deficiency, there is something called material weakness. Material weakness in ICFR, internal control over financial reporting. Here, and then there are other weaknesses which are neither significant deficiency nor material weakness. Other weaknesses in internal control. In internal control over financial reporting. Of course, we are only concerned with the internal controls over financial reporting. We are not in the entire syllabus. We are not concerned with overall internal controls of the company, right? What the marketing internal controls are, what other internal controls are. We are not concerned about that. Okay. we are only concerned about the internal controls over financial reporting. So significant deficiency, material weakness, or other weaknesses. Here, the only word is material weaknesses. Are there any material weaknesses in the controls that we are going to report? Okay. Of course, we will see later what we will do if we find significant deficiencies, if we find other weaknesses. What we will do with that, we will see later. But right now, in this report, you are going to express an opinion on the effectiveness. And basically, effectiveness means you will say that it is effective only if there are no material weaknesses. Audit of internal control over financial reporting must be integrated with an audit of financial statements. Must be integrated. If you are asked to do both, then you must integrate the two. Right? See, if you are asked to do means for non-issuer, there is a choice with the non-issuer whether they want to get just a financial statement audit, FS audit only, or they want to get an integrated audit done. So if they want to get an integrated audit done, it must be integrated. That means the same CPA firm must do it. For issuers, there is no choice. Issuers have to get an integrated audit only. So they don't have a choice. Okay. Objective of ERISA. So 1 second, let me go back here. What is ERISA? Employee Retirement Income Security Act. Employee Retirement Income. That means, whatever you get at the time of your retirement, Security Act of 1974. The overall objectives of auditors. This we are talking about ERISA plan. The ERISA plan financial statement audit. That means the audit of the retirement plan. Okay. Of the, let's say, the pension fund. So for example, Coca-Cola will have a Coke pension fund or pension plan. Right? So Coke will have its financial statements. The pension plan will have its own financial statements. So right now in this paragraph 4.3, we are talking about the audit of this. Not Coke's financial statements. Not Coke's financial statements. We are talking about the ERISA plan financial statement audit. The overall objective of auditor when conducting an ERISA plan financial statement audit are accept an ERISA plan audit engagement when the basis upon which it is to be performed has been agreed upon through establishing whether the preconditions for audit are present. That means the basis upon which it is to be performed. The basis has been agreed upon. And preconditions for the audit are present. Preconditions present. Appropriately plan and perform the audit of ERISA plan financials, including procedures required by this SAS on certified investment information when management elects on ERISA section 103A3C audit, right? So procedures required, appropriately plan and perform, including the procedures required by this particular standard. Form an opinion on the ERISA plan financials based on the evaluation of audit evidence obtained, including evidence obtained about comparative financials. Express clearly the opinion on the ERISA through a written report. Perform procedures and report. Perform procedures and report on the presentation of the supplementary information. Report on supplementary information in accordance with this SAS and appropriately communicate to management and TCWG, those charged with governance, the reportable findings that auditor has identified during the audit, right? So that means, first of all, you should accept the engagement only when the preconditions are existing, right? If there are certain preconditions, okay, those are already met, those conditions are met, the basis is agreed upon, you have planned and performed the audit, you know that you will be able to perform the procedures, right? Then you will form an opinion, you will express your opinion through a written report, you will also perform procedures and report on the supplementary information, and then you will communicate to management and TCWG the reportable findings. These are the overall objectives of the ERISA audit. Okay. That's it. And it's also time. So now, guys, we have done 2 modules. Next class, we will do the MCQs of those 2 modules, and we will start with module number 3, forming an audit opinion, right? So quickly, your questions. So Deepak, okay. So I can see, Deepak, it's only your questions. So why don't you give me a call and I'll answer your questions, because it's already time. Okay. So why don't you give me a call on Monday? Not today, not tomorrow, but on Monday, give me a call and I'll reply to all your queries. Okay. So guys, tomorrow, same time, 7 o'clock. Tomorrow, we are not going to do any MCQs. Tomorrow, I'm going to actually start with this module number 3. I'm sorry if I said MCQs. Tomorrow, we are going to do module 3, and if there is time, then further modules. Questions I'm going to do in the coming weekend. Okay, of whatever we cover this weekend, we'll do questions in the coming weekend. My only request to you is you should not try the MCQs on your own right now. Okay, before I do it with you, please don't try MCQs. Just do your revision well. If you think you have done your revision well, then do it one more time, right? It won't harm you, but don't attempt questions right now. That's my humble request. Do the questions with me for the first time. Then, of course, later you will have to do it on your own anyways. Okay, so thank you for joining. And I'll also be taking the bar class, yes, in the evening, that is at 7 p.m. Okay, so I'll see you in the bar class at 7 p.m. Those of you who are attending. Otherwise, I'll see you tomorrow. Thank you, guys. Thank you. Have a good day.